Hey everyone, welcome to Breakout Wednesday. It's November 6, 2019. It's about 10:30 a.m. Perth time, 1:30 p.m. Sydney time, about 10:30 p.m. in New York on Tuesday night. So the markets in America are much stronger than Australia. This is a chart of the Nasdaq. It's broken out of this range. It hasn't gone back into that range and it's kicking on a little bit. The Nasdaq market is the one I trade a lot of, and it's a lot easier to trade at the moment than the Aussie markets because it's broken out of its range, and therefore a lot of its stocks are having powerful moves and moving out of bases. If we go quickly to the All Lord chart in Aussie, it's still range bound. It's just chopping sideways. There's still false breakout. There's false breakout city in Australia, and I'm finding it a lot harder to trade, and so I'm focusing mainly on the Nasdaq market until the All Lords decides to break out and take out those highs. Okay, that's why I like being access to both markets. It means I can put my money at work where the markets are actually trending, because being a breakout trader, trend trader, I struggle in sideways markets like everyone else that trades that way, and so I need to. This gives me a bit more flexibility. All right. So as far as I'm concerned, as far as I can figure out, there hasn't been too much market money in America leaving the markets. It's simply rotating still away from software stocks and into some Chinese stocks, again, energy stocks, semiconductor stocks, and then other leading stocks such as Apple. So, some of the semiconductor stocks that have been getting the money, MLNX, I've talked about a while ago. I had a quick trade in that, and then QCOM is another leader, which has been basing and then breaking up out of this nice base here. And so these semiconductors are great. I mean, they're not going to double, triple, quadruple very quickly, but they can have some pretty decent moves. If we look at just a couple of the Chinese stocks that seem to be doing better, NTES has been basing for a while and has broken up. It had a bit of a down day last night, but it had a pretty nice kind of break out of this base, and then it formed a tight little tightish Darvas box here and had a breakout. So anyway, we'll see how that one plays out. And some of the other Chinese stocks, Momo, which I'm pretty sure is like a dating site in China, a little bit like Tinder, is basing and breaking, and then JD, which is like a Shopify site for China, is basing, and just that's a really nice base, and it's looking like it's breaking out of that. So all these, I like this one, is all these touches of the 200-day moving average, bouncing off the 200-day, forming a nice base, ascending bottoms, and rising bottoms, and you can call it ascending triangle if you want, or you just call it a nice looking base. I mean, it doesn't matter, and but it's broken out, and so I've got a position in that one. And then quickly back to Apple. Apple is by far my biggest position and my strongest one, and really happy with it. And it's broken out. It's gone for it, and I just don't. I like everything about the company. I like their fundamentals. They're moving. They don't just do products. The Bank of Apple is really doing well, and they've figured out how to do all that sort of stuff and become a much more diverse big company. And anyway, enough of that. Let's not talk too much about the fundamental stuff. So now I just want to move on. I'm going to do some scans for newer members. I'm just going to show you guys how I scan, and one of my favorite scans I do, and why I do it so much. And then I'm going to show some stocks in the scans that I find that I like and I'm interested in. And then I'm really going to discuss one thing that I don't discuss much is how I differentiate. Like if I have 10 good trade setups, I mean, how do I figure out which ones to take and which ones to leave? And it does come down back to the fundamental stuff, which obviously being a chart-in program, it's not something maybe we talk about, but I think it's important to understand. Like if I look back over hundreds and hundreds and hundreds of trades done, I look at my win-loss ratio in trades in really, really good companies such as Apple, Amazon, Netflix, all that sort of stuff, even in the Aussie market, the good companies, my success rate's heaps higher, and all these little trades you do in tiny penny dreadfuls, I mean, they're really fun when they work, but there's this famous trader called Dan Zanger, who is famous for. So he's famous for being a world record holder in terms of returns that he's made. I forget exactly what his percentage return world record is, but it's nuts. And he's famous for only trading in expensive stocks, leading stocks where the institutions want to put all their money. He doesn't stuff around in anything that's cheap. and we're talking about the American market here, so things that are cheap in America tends to be below $5. You know, the penny dreadfuls in Australia that trade for 10 cents here, that's the equivalent of an American stock trading for like $1 or $2 or even $3, sometimes even $5. And so a lot of the biotech companies are trading at $5, $6, and they really trade like penny dreadfuls in Australia trade. And so, you know, Zanger's famous for concentrating on, you know, 30, 40, 50, 100, 200, $1,000 stocks, and you know, companies that actually have real earnings, are making money, and so he has his own YouTube channel, and you know, he's got a service too. I mean, I never understand why someone who apparently is such a good trader needs to sell money with membership stuff. But anyway, like, I won't get on my high horse there. But his YouTube channel is really good, and he's got heaps of cool videos, and he's got some podcasts out there. And I suggest that, you know, if you're struggling or whatever, listen to his stuff and study hard, because, you know, the patterns he trades are just like the patterns that Frank trades and I trade, and, you know, everyone, all the, you know, experienced Protrader members trade. But he just combines it. Sometimes, he doesn't always, but he likes to combine it with CanSlim stuff. So he's a disciple of William O'Neill, who wrote the famous book How to Make Money in Stocks, and so he's looking for companies with explosive earnings of at least minimum of 25%, but like ideally a lot higher than that, right? The higher the better. But read the books and do your own study. And so that's how I differentiate on the companies I want to own. You know, I want to be on the exciting companies that the institutions are in and that are leading the way and have growing earnings and really great products. So that's why I like Nike, Lululemon, because I love their products, and, you know, and they have awesome earnings and all that sort of stuff. Okay, okay. Anyway, now let's just get to some scans so okay, let's just go into the Sam's Darvas box here, and I'm going to and then I have it set just like that, right? You guys can pause the screen and look at that. So then we do a scan. I forget whether or not that was ASX or Nasdaq. This is ASX. So, and then we'll move on and we'll scan the Nasdaq market after and run through that. So there's just a bunch of stocks come up. I'm just going to run through a couple I like. Let's just find NAN. All right. So Nanosonics, it's been a leading stock for ages. It had this huge gap up. It hasn't closed that gap, which is great. It formed a high, and, you know, this was quite a loose base, and there's a lot of air in here. I've got the browser right now, and then, you know, that's not a good signal to take that breakout of that all-time high. It's not tight enough. It's too loose and unstructured. But now it's forming a tighter base just to the right of this all-time high. Okay, and do your own research on the fundamentals, but, you know, it's a good case for the stock. And I like this Darvas box. You know, if it can just cruise around sideways for a bit longer, but it would be cool. But if it breaks out in a couple of days, I'm going to be in that. So that's just an example of a stock found using the Darvas box screener. And yeah, anyway, let's move on. So there's the next one I want to quickly chat about is RMS. So RMS is a resource stock, and it's just been going sideways for yonks. So I'm watching this one. Let's just have a quick look at the weekly, and, you know, that's just cool. You know, that's nice. It's a nice pattern. It's a big base, and it looks good on a weekly chart. It's however many weeks that is there, 10, 11 weeks, I'm not sure, but it's a decent base. So I'm watching that one unfold. And then there was only one other in Aussie that I wanted to touch on here. Yeah, Ceiling Travel. So it had a huge gap up on massive volume, and it's just based in this box now, and it looks like it might break down from that box, in which case I'll probably leave it alone. But if it can just tighten up here and break up, then, and this is a sort of pattern a lot of people get scared off in this big break, this big gap up, whereas I'm the opposite. I think that's what we want. We want stocks that people want to own and they're excited about, and therefore it's gapping up. And then I'll jump in and research this thing, figure out why it gapped up. You know, I think this company had a cap raise, plus they had an acquisition as well. And so that is, you know, I'll read a bit about that. I'll figure out, you know, the cash flow of the acquisition and that sort of stuff, and have a look at their earnings and see if it's something that I want to have a go at. All right. So now let's just do the same scan on the Nasdaq chart. There's heaps more going on. That's the wrong one. There's heaps more going on in America, and this is why I like trading it, because I have ADD and I love having heaps to do, and you're always busy when you've got so many stocks and so much money in America floating around, and speculators and people pushing prices up and down. And so yeah, sure keeps you busy. And so there's a scan done, took about 10 seconds, and I'm not going to run through all the stocks because this talk will go for like an hour if I do that, but let's just have a quick look at some companies and basis setting up. So audio codes, basing in a big box, and I'm looking at this tighten up. It has a round number of 2250. It has pretty good fundamentals behind it. It's in a long-term uptrend, and let's just flick to a weekly. It looks nice in the weekly. Okay, another few weeks of consolidation would be perfect, but that certainly goes into the watch list. All right. Now the next one, and probably the one I'm the most interested in to add to my position in Apple, with another kind of lead-in stock, is good old Google. Right. So I think we should get, okay, so good old Google. Now Google is in an all-time high. I talked about this stock a few weeks ago when I looked at it on a monthly chart at the end of the talk, and so that's its monthly chart. It's been based in since back here. When's this? Still getting used to this new bloody computer, but okay, so that's July 2018. So it's been based in for over a year, coming up to a year and a half nearly, and that's a pretty decent base. And now we have Darvas box up, Darvas box. The thing about Google, I follow these high conviction trades that I take bigger position sizes on. I do a lot of reading, and Google had earnings that came out just with this little retracement here, and the earnings wasn't that impressive. However, the price hasn't been slammed because of that. And so when you have news which isn't brilliant, the report's actually pretty good when you read it, but it wasn't as good as some of the analysts wanted, and so you expect those to get slammed. When they don't get slammed, the market is kind of telling you something, and I like that. So I'm looking, if the stock reacts differently to how you expect it to react based on news, it's telling you something. And so we're in the Darvas box sitting at all-time highs, and to me, I'm gonna, we look weekly, monthly, daily chart. It's telling the same story. We have a stock that, they're doing big things. They bought Fitbit, their Android stuff, their Google Home. They have so many plans for the future. They have nuts revenue, and so I'm gonna trade this Darvas style when it breaks that 1300 level, right? And so moving on to the next stock in the States, so Garmin. So I traded Garmin back here with this ascending triangle, and it reaches profit target. I think I started the talk when that trade was in motion. I remember talking about it months ago. But now we've had another Darvas box at all-time highs, a gap up on decent volume, and we're basing this box. And so I'm just going to watch that thing. If it tightens up and breaks that all-time high, I'll be all over it. If it goes back down and stuffs around, then nothing kind of lost. All right. So moving on, ISRG. Okay, this stock, I like its fundamentals, I like its earnings, all that sort of stuff, and it's sitting in Darvas box. This is actually, let me just zoom out because this thing is in a pretty cool base, going sideways. And so we have all-time highs up here. Maybe we can break this box. It's it's definitely probably going to have a crack at the all-time highs. And anyway, so that is a stock that that I like as well. It's an expensive stock, right? $569. Okay. A lot of people kind of maybe turned off by that, and obviously the Google chart before was $1,300. If we look at Amazon, what's Amazon at the moment? Let's just go back to Amazon. Whoops. So Amazon is currently at $1,800, and so if you remember, those of you who have read the Darvas book and studied that, he only concentrated on expensive stocks too. I definitely think there's something about it. My best trades during my life have been in expensive stocks, okay, in real companies who are doing real things, making real money, not just some pipe dream about one day doing something, or maybe not, and needing to do cap raises every 3 months to stay afloat. That's no way to run a company, and there's no wonder that a lot of those trades in penny dreadfuls are just complete dogs, even when the setup is pretty good. So now just a couple more to flick through. Okay, Microsoft. So Microsoft just been basing during the whole, retracement, trade war, blah 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 blah. Microsoft just based sideways, and it gapped up on earnings, and then now it's just in this really super tight Darvas box. And so sure, maybe Microsoft doesn't fit the bill that I talk about in terms of explosive stocks that are going to fly up and all that sort of stuff. But we have one of the biggest company, I think, in the world, who have awesome products and awesome earnings, sitting at all-time highs in the Darvas box. If I have some cash left, I think it would be a safe place to park some. So now a couple left, just on the different scale of things in terms of risk profiles. So SGen, Seattle Genetics, huge gap up, based in a tight box. Just for me, that's I love these power gap ups and then Darvas boxes that form after it. I think I don't have the actual stats, but I can look through my results and see where money's been made and lost, and I've certainly done okay of those setups. It goes against human nature, right? For those really high ones. But another one I'm looking at is XNet. They're into crypto and cloud technology. Do some reading if you trade the US market. But if this can, this is classic Darvas. If this huge volume, huge up move, based in a Darvas box, if it can break that high, it could be cool. So that's it. And I wanted to quickly touch on some other stocks. So McDonald's, they had, as people probably know, the CEO went and did some, had a relationship with an employee. They've moved that CEO on, but they've got a pretty bloody good replacement CEO, and so I think this sell off from that is a bit kind of maybe over the top. But anyway, I still hold that in my really, really long term account. So anyway, I've obviously taken a beating on that, but I'm up a lot still on it. So that's the way things go. And one of my other favorite ones, Nike, had a switch over in a surprise switch in CO2, and so I've got a long-term hold on that, and I'm just gonna try to add to this. If it can get down to its 200-day moving average, like it did this time, then for me, I'm just gonna whack more into that position and for the long term, and my kids can inherit that one day. All right, catch you guys.